Hello guys, and glad to have you on board again. Today I'm going to add up on another separate series preparing for the big 22-year preparation video because well, it's going to take way too long if I do not split that video into separate sections. The previous one that needed its own separate topic was about yields, which is going to be one of the major impactor for the year to come. So it really deserved its own 20-minute plus video just to cover these perspectives properly. Well, it's going to be exactly the same for Bitcoin, because Bitcoin is going to be an absolute big element for crypto in 2022. And I say crypto, but really in the general market perspective, for multiple reasons. The first one is the adoption cycle is reaching its highest momentum curve, which means the acceleration of the momentum itself, so the derivative of the adoption cycle. So considering it like the growth, and remember the growth and the adoption phase is basically like an S shape, okay, in which the growth is acting like a bell curve, okay, which slows down. So this is the derivative of the growth, okay. And if you look at the derivative of the derivative, which is basically another bell curve, okay, which acts like that, okay. Okay, and this one goes negative, of course, because there's going to be decreasing in the momentum. Okay, this one acts like another derivative. So we are this year ahead probably going to be nearing the peak, which means the acceleration of the acceleration itself is going to be at its highest. But that doesn't mean the prices will surge. So let me be real clear with that. Prices always anticipate the demand, because that's what speculative markets are meant to be doing. So this is why we had a massive breakout last year. We've broken in multiple timescales and time frames. We've broken daily, weekly, and monthly charts, which means most of the acceleration is already on the charts, though the markets have well predicted once again that these things will occur. And of course, those who were there before have made most of the gains so far. Doesn't mean that there are no further gains to make, because anyhow and anyway, adoption can only drive up the demand. And when there is no supply or limited supply, this can only drive prices up. But of course, this makes people totally crazy, because of course, as this market matures, there's going to be much more complex way to access this supply. Though these markets are new, let me be real clear, a lot of people who are getting into crypto wants the real thing, which means they want to buy real cryptocurrencies. For the techie guys of us, we want to buy our own coins and our own keys and so on. And there are further down the road more people who are going to be willing to do this. And these guys simply drain the supply of the exchanges and all of these derivative places. But in that perspectives, okay, you need to understand that most of the demand, institutional demand, will be for derivative access to Bitcoins. So these things will normally do one thing. They act like a counterbalance, okay? On one end, we've got, and we're probably going to have the strongest ever demand on cryptocurrencies on a very, very, very limited supply. So normally these things should drive prices parabolic, but like we stated, the first factor is that we've already anticipated most of it last year. So it's probably not gonna skyrocket, bubblish, go forever to 500K, whatever. But it's going to go up. That's one thing we know for sure. The counterbalance stuff is going to be a lot of the demand coming from derivative guys or people bringing in some kind of an artificial supply, either through lending platforms. I mean, we've seen emerging most of them, like, you know, the Swissborgs, the Nexos, lots of centralized entities who are creating derivative markets through lending and borrowing. So they will help bringing some artificial supply, temporary supply, to reduce the volatility on the opposite end. And I think both of these forces will tend to balance, but of course not for a neutral price action. It's definitely not going to be the case. It's going to be upside for 2022, and we're definitely going to close with a higher price than the one we've opened the year with. But the question is, how far away is what I would like to answer today. And it's going to take approximately 20 minutes at least to get there. Okay, so to set things real straight, this is the background idea, okay, and the fundamentals of play. We're not going to dive much deeper into this because there's only one thing that matters when it comes to try to predict the market. It's not to try being right or wrong. This is for assholes. What professionals are trying to do instead is to risk manage, meaning that we try to forecast the likeliest outcomes by technically assessing what are the probabilities, not just what I would like to see or what other Bitcoin maxi or ETH maxi, whatever, would like to see. We put aside our emotions. We certainly do not rely solely on the fundamentals because that's what bullshitters do on YouTube. So try to look at prices. Prices generally don't lie, or if they do lie, they cannot lie for too long because value is what the markets are pricing. So is the Bitcoin value going to increase? Yes, but how big the prices will do as well is where it gets tricky. So first of all, when we do analyze the market, we need to settle for an appropriate time frame to look for, okay? Because people who looked all across the board on smaller time frames or whatever are generally losing their minds because they cannot sort things out in their head in the end. So just look at what matters, okay? So of course, as we make 22 predictions, we're certainly not going to dive into 3-minute time frame. But anyhow and anyway, in here we can clearly see that the appropriate time frame to look for are these ones. The daily chart, we're trading in the context. So for those who are looking at me and don't know anything about the indicators, well, of course, I'm going to try being as explanatory as I could be. But you're going to have to learn a bit about me, about my stuff. So these things in here are basically support context. So these are value areas in which price reactions matter, okay? I don't give a fuck about the prices anywhere else. I need to see what prices do in these areas, just like these, okay? These are areas of interest, considering them that way. These are certainly not buy-side signals. Absolutely not. These are contextualizing stuff. They help me know when to look at the market and on which time frame it matters or not. So we are in the daily contexts, and the weekly contexts are not very far away. They are below, which means, first and foremost, if we ever get there, and if we make weekly candle closes inside these contexts, or even worse than that, below, which means closing below 32K or whatever, this would be the sign that the reference time frame is no longer the daily, and we have to switch to weekly. And if it ever happens, that means I'm going to have to switch to another plan. My favorite plan right now is the one that sounds like the technically most probable one, looking at the daily context to know what the market is likely going to do and where are the next areas in which price will matter. And I certainly won't give a fuck about anything that's going to happen in between. But if it changes the reference time frame, I'm going to have to adjust. So that's the first thing. I have a major plan on a daily chart, and the outcomes are statistically very relevant, and I'll make this analysis afterwards. But these could change if we ever reach out to weekly relevant timeframes. And in that perspective, all of the timescales will expand to the higher timeframes. And in that perspective, my 2022 plan will change. So that's the first thing. I do not have one scenario because that would be asshole to do such a thing. And I certainly do not. They are some significant probabilities to require readjustments if we dive down to 33K. Okay? Of course, these require weekly candle closes, and the bare minimum to get to an interesting weekly level would be to close a weekly candle below 38K. Okay? And of course, the contexts update on a quarterly basis. Context are these channels in gray. Okay? So they shift up or down on every quarter. So I only will care a lot about the quarterly candle closes because things will change and the context will change if we ever close a quarter below 33K. Okay, so that's one thing. These are the things that I need to see if the market is changing course for a weekly trade. If we dip with weekly candle closes below 37K, that means something might be on the verge to change, but it's not necessarily conclusive until we get the quarterly candle closes in the same area. Okay? Do I think Bitcoin can rationally close the first quarter, meaning 31st of March, below 33K? I wouldn't do that, okay? For simple reasons. In the markets, generally odds are nearing 50-50 chances. This is because most of the time we trade across the value, okay? Across average prices, which means in my indicator, what I call for average prices is this blue line, okay? Though we generally oscillate across, which means most of the time prices and value are pretty much equal. But this is when the market is ranging, hesitating. When we don't know what to do, we just scatter across prices to filter out the dumps and try to find appropriate prices in between, okay? But this is not what happens when the market has a direction. And we know in here that there is a clear background direction. There is more demand, and there is even more demand coming next year. And there is very limited supply. So these can only drive prices up. This is the reason why we have the big trend we've talked about, okay? Those trends must be visible. We need to see them through prices. Of course, we see prices fucking up the resistance context, getting the hell out of moving averages. And this is definitely the sign that there is a trend. And a trend does one particular thing more than anything else. It shifts the probabilities. So in terms of odds, statistical odds for prices to get there, though in the resistant context rather than in the support context, are by far more significant. So, yes, we might be diving onto some supportive areas, but statistically speaking, 22 has far more chances to retrace up to 70k area or something like that, and we'll make it more precise, rather than going to 33. And this is not because I'm a magician and I know the future, it's just because trends do that, and they have a lot of history to talk for. Look at all the asset classes, all assets that you could scroll through. When there is a trend, prices go up, period. Of course, that doesn't mean 100% chance they will. We have to risk manage. Okay, so we know everything about that. The weekly risk limitation requires prices to dip down below 37k at worst, at least, and they need to hold weekly candle closes out there, but they also need to confirm with a quarterly candle close in the nearby areas. Closing below 33k will change the background scenario to a weekly pullback, which means we're going to have to settle out there for much longer than that. So if it ever occurs, which I don't think is statistically relevant, but probable still, means that we're going to have to review the entire time frames. And in that perspective, probably 2022 will be an absolutely boring year for crypto, which I said, fundamentals and adoption curves totally says it's not going to happen, but could happen. So we had to talk about this one. Now let's get into the most probable thing. The most probable thing is, of course, the daily chart, in which we are trading with rising context, rising moving averages, and the context themselves are sitting on top of the moving average. So this is the sign of a trend, and we need to figure out how mature. So of course, that trend has made its breakout in here. It's gone very excessive. That's described by the fact that those context boxes are unfolded one to another, both on the support and resistant context. We're getting the hell away from the moving averages to some extreme valuation, found some profit taking out there, and then, oh boy, rapid, violent pullback, very violent pullback. Okay, this pullback has to build a third range boundary, which has been built there, validated, and broken. So this was an area of interest, but that was the second range boundary. This is for professionals only to try to catch. So I gave you my entries for these prices, and I told you to be very cautious about them. We've got right up to the third range boundary, which was, first of all, assessed to be a possibly bearish one. So this is the area in which prices should have rejected if there was such a thing as a bear market. And of course, we did not. We validated and then fucked this scenario to go for a neutral third range boundary, kind of a double top pattern. Okay, so in here, what we know about that is that the pullback that we have from this daily breakout is now mature because we have more than 3 range boundary. So the next time we have a dip out there, we're going to pass through. That doesn't mean it's going to be that easy because, of course, ranges all have their own structure. And what I do not like with this one is that we do now have a mature pullback. Okay, sure thing. So we're probably going to go right back up in here. Yes, I do think we're going to have absolutely no problems dealing with 75k in 2022 as long as we do not switch to the weekly chart reference, okay? Which means we'll still get there sooner or later, but more later if we go for weekly. Okay, so this is my first target area. Okay, in terms of other risk limitation, I need to figure out what are the probabilities for this market to rebound there rather than going lower and therefore triggering my weekly switch plan. Well, in order to do this, I look at my indicator. They tell me that this is definitely an area in which it can happen, and this square that you see here tells me that the algorithm itself has detected an interesting tradable context. That's one thing. That means I'm not the only fucking one to see something interesting in here. What it tells me is the nature of that signal is a bullish cycle, is a bullish range. Sorry. And what a bullish range does is that it generally buys prices inside the support context rather than below. So that erases the probability, statistical probability of going lower. Okay, and it also opens up the door for a market to break above resistant context. Okay, in a bullish range, we trade and close above the resistant context? Oh, no shit, Sherlock. What was that? A bullish range context, right? So there was a bearish range opportunity in here and the market didn't take it. Instead, it took the bullish range option. So we do have another bullish entry, which means the context we experience now are pretty damn similar to the ones we've seen last summer. The supports are there, the visible horizontal support is there, the sentiment is very, very bearish as well. So yeah, there is quite a lot of similarities. What that tells me next is that if we ever go for the same pattern as last year, well, we're probably going to go all-time high, but not necessarily to the moon. We're going to find some strong resistances as we're going to get near to the 75K area, okay? Because remember, anytime we trade above the resistance context, we're going to settle candle closes out there, but we're also going to find resistances. It's not a market that goes to the moon. So 2022 for Bitcoin, despite the craziest level of adoption, I don't think it's going to be that hell of a bullish year for prices. I think prices will definitely close higher than where we are now. I have absolutely no doubt with that. It's not a 100% certainty still, but I have very high level of confidence due to the signals I have on the daily chart and the fact that the weekly chart still calls for bullishness. So I think the mostly demanded area this year will be these ones. So I think we're going to spend most of our time trading above value, which means we should trade a lot more above these levels in here, 55K. So I think that we might be on a negative stance earlier this year, but it's probably not going to last very long. And until we find that bottom, could take another few weeks, no problems with that. We should buy inside the context, and the context is still rising. So I don't see that much room to the downside. And those who convince themselves there is, I think, are trading against the favorable odds that are far more bullish side orientated. Still lacks of a signal, which means I use momentum to risk limit the probability of prices to move according to the contexts. And in here, I lack of a bullish signal. So I do have a context detection. I would have liked to have a momentum confirmation to be fully confident with the outcome, meaning that there is still a little shadow into this room, okay? But if prices duly react into this area, don't get me wrong, the target is trading above the resistant context, though probably an all-time high to be seen in 2022 by very significant margins of errors, okay? By very limited margin of errors. Okay, though, if I want to put some additional information, I would tend to say that normally what I tend to pay attention to in a range is where are the third range boundaries on shorter time frames that will help me figuring out the horizontal level that may matter a lot. And we did have a third range boundary in here precisely on 58.9K, so call it 59. And I think this is going to be the level we're going to oscillate across all year long for 2022. Like I said, it's above the average value, so it's kind of normal in that sense. So that will be my first profit taking area for this year. I think we're going to get there. I think we're probably going to overshoot a bit, but this is where we're going to find heavy resistance earlier this year. I think the bull cycle that we'll get, and it's going to be a hell of a good one, don't know how long it's going to last, but I'm going to give you approximations, is very likely going to be set in two sets of cycles, because trends move in a straight line, but bullish ranges, okay, they move like ranges. They go up and down, but they go more up than down. Okay, that's what you need to understand. So there will probably be one consolidative cycle in between. How fast, how deep retracement, I don't know anything about that. All I know is that the targets will very likely be all-time highs and the 75K-ish areas. Okay? Because we're going to have to trade above the resistant contexts, and that's pretty much all about it. So everything stands for a bullish entry. We do have the end of a bear cycle with this big sine wave that you've seen here. Okay, just lacks of a momentum signal, but we're pretty damn oversold on the supportive areas, so that's one good signal. And that's going to be it for my 22 plan. Okay. Basically, bullish range means that this is not going to be the crazy shit that people would like to replicate. It's not going to happen anymore, okay? But as we get to find the profit-taking areas, we need to understand that anyhow and anyway, we are on multi-time frame trends, meaning that the probabilities for an excess, meaning prices getting excessive above the target levels, is very significant. So I'm certainly not going to gamble into the short selling side in here unless I have very attractive prices and very good reasons to do such a thing. Okay? So I think more of a taking profit in here, mostly on my altcoins, but I'll explain this on the Euro review. So eventually I will short some Bitcoin, but be damn sure that I'm going to keep holding mines, okay? So I'm never going to be net short in this market. The best I could do is cover my trades because I expect a retracement. But that's the second element of this equation. Remember what we've said earlier. I do not think there will be lots of volatility in 2022 due to the fact that there will be more and more derivative markets and more market making trying to bring in some additional external liquidity factors. And in that perspective, I think that's my second prediction. I don't think we're going to get across 100K. I think we definitely will go above 75. How big, I don't know. But I think this will be this year's motive, going 100K, whatever, just adding another digit to Bitcoin prices. I think it could eventually occur, but if it does, it's not going to last very long. Second thing, I think that the pullback that will occur after we try and fail or try and succeed, whatever. I don't gamble with this, but I don't think we'll get there. I think the drawdown is not going to be that significant. A lot of people will call for a big bear market. I don't really believe it's going to happen. I think worst case scenario, if we did breach the 100K, is that we will retrace down to 60K, which is, and don't get me wrong, I'm pretty damn confident with that, going to be the absolute big level for this year. 60K, and we're going to oscillate a hell of a lot across this level. And to be honest, I think this is where we're going to spend most of the volume in 2022. So my second prediction is that this will be the center price, the key anchor price for Bitcoin in 2022. Don't ever buy a single trade on Bitcoin above this level. And the further away we try to go above it, the more expensive coins will be and the more sellers will eventually come to add up liquidity. The big problem is that if you do play with this, adding liquidity by short selling or whatever, be aware of the other factor we've talked about. A lot of the demand is for the spot market and there is very limited supply. So I wouldn't play on gambling, adding liquidity on derivative market by short selling. Okay, only for professionals. So don't try to short sell Bitcoin in 2022. Just profit take if you bought some. Try to buy low, try to sell high. Don't try to catch the bottom. Don't try to sell at the top. That's for the dumbs to talk about. And well, guys, you've got everything I had to share for 2022. 60K, big fucking level. And I generally tend to say that I like 1-to-1 ratios. So when we'll find that bottom, if you want a final additional tip from Pro, take that 1-to-1 ratio across 60K, okay? So if we ever dip a bit lower, which I doubt we can, and if the bottom is already there, I definitely target that the level in which starts to sell this year will be 77K area, okay? So you got all my plan for 2022, all of the tips and tricks I'm going to use to get to these conclusions. See you guys later.